much. My next guest says the number one and the only threat to the markets is the Fed. Let's bring in Key Advisors CEO Eddie Ghabour. Eddie, good to see you.
Good to see you as well. Thanks for having me.
How is the Fed playing into your investment strategy?
So they are the number one thing that could really cause us not have a Santa Claus rally, because I think the market has made it crystal clear. When you look at the price action over the last 3 weeks, this market started to bottom when we started to see the probability of rate cuts increasing going into December. So as long as Powell does not disappoint next week, this market should see a very strong rally in the back half of December, but it's going to be choppy here this week and next week, and we are playing it by buying the dips. We came into this week with 30% cash. We bought this morning at the open, and we will continue to look for opportunities, but we will keep some dry powder because Powell's speech will probably cause another buying opportunity before we make a next leg up.
Yeah, December 10th. The president says he knows who will replace Jay Powell as the next Fed chair. And Kevin Hassett says he would be happy to serve if he is picked. Listen here.
So I think that the market expects that there's going to be a new person at the Fed, and they expect that President Trump's going to pick a new one. And if he picks me, I'll be happy to serve.
Eddie, who would you like to see serving as the head of the Fed?
So obviously the market liked the news with Hassett.
Yep.
No disrespect to him by any means, but I think the most qualified person is Reider. And the reason why I say that is he's the chief investment officer of global bonds for BlackRock. And we are in a really tricky spot here where you are going to have to navigate through some really tough markets. And I want someone that truly understands the bond market and how those capital markets work, because if not, something could potentially break down the road. We have an amazing amount of debt that's unsustainable and dangerous, and we're getting ready to go into an easing cycle, which could cause some disruptions in the fixed interest rate market because we could see inflation accelerate the back half of next year. So because of those things, I think Rick would be a phenomenal choice, and I think the market would love it.
Whether it's Rick or Kevin Hassett or Mickey Bowman, Kevin Warsh or Christopher Waller, do you think that the president will announce the pick before the December 10th Fed meeting?
I don't. I think they'll wait till after, and as an investor, I prefer that, because if we get a dip next week because Powell is hawkish in his press conference, I would buy that dip on the anticipation that we're going to find out who the next Fed chair will be, and either one of those choices you just talked about will be much more dovish than our current leader there with Mr. Powell, and the market will reward us, I believe, in that scenario.
They need to also be powerful. There's a lot of divergence on the Fed to get everybody in line. Take a look at this, Eddie. The S&P 500 notched its best Thanksgiving week since 2008. Now, the 2008 rally was fueled by the hope of government intervention. We were in the middle of the financial crisis, but the S&P 500 did not bottom until March of 2009. So last week's gains were helped in part by optimism that the Fed will cut in December. Do you think if they do or don't, this rally can be sustained in the new year?
I do think it can be sustained, because the biggest difference between that time period and where we are now is we are not in a recession. We're not anywhere close to a recession. We frankly believe the first quarter next year, we're going to see a reacceleration of growth economically. And regardless of who's in the Fed, we know that QT ends today. It's going to be accommodative one way or another. And anytime you increase liquidity, when the rate of change of economic growth is accelerating, it is really good for risk assets. 2008 time period was a deceleration of growth economically. We were in a bad place. So you really can't draw up a better setup going into next year than what we have going into it. We just have this little air pocket right now that we're having to navigate through. But again, once we get through next week, I think it's going to be off to the races. In the first quarter, I think is going to be extremely strong in 2026.
Stock picks quickly, Eddie.
So if you're going to be in a rate cutting cycle, we do think small caps, there's a place there. We like home builders going into there as well, too. Our best Mag 7 play is actually Apple. Apple is now becoming cool to own again. It was thrown out to the wolves earlier in the year. We bought in August. We're going to look to continue to increase exposure there. We think it's going to have a big 6 to 12 months.
Eddie Ghabour, good to see you. Thank you very much.
Good to see you. Thank you.
Investors are